Good afternoon and welcome everyone to the live Q&A, the trading talk session. My name is Danny and I will give you the webinar today. Before we will begin, as always, I would like us to go through a quick sound check to make sure that the sound is in a proper level. And of course, you can see the screen here. You can see the screen here. You can use the question section to let me know that the sound is okay, and then we can carry on with ease. And of course, I'd be happy to also know that you see the screen here. Thank you, Eva. Very good. Charlie. Lila, very good. All right, so let's begin with a quick introduction to the webinar, how it's going to happen, basically the structure of the webinar. I would like to say, first of all, that the webinar itself is live, as you can see, live questions and answers, and it will be recorded and uploaded to YouTube later on. Okay, and you can ask whatever you want, regardless of the subject that I'm teaching. You can use the question section and just write down whatever question you have regarding trading or AvaTrade. Okay, and I'll do my best to give you the answer. Okay, so first of all, we'll have the questions that our team has prepared. It looks like that. We're going to go through the questions and we're going to see in which order and how we're going to answer them. Then we have the dynamic questions, which is, like I said, a true purpose of this webinar, which are questions that you guys will be asking. And this slide is a bit more informative, so I'm going to send you some links to save you the trouble to find them by yourselves. And this last slide is more into analysis, just to explain how things can look like from the analysis perspective. We'll see if we'll have time to touch that if it's not going to be covered from the answers to the questions. Okay. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, as I said, guys, the webinar is recorded, so even if you've missed a part or you had to go or you have to take a break, you can still review the webinar. Just go to our YouTube channel. Go to YouTube, look for AvaTrade. All the library with the recorded videos are there. You can go there and enjoy whatever you like to rewatch. Other than that, I think we're good to go. I just want to make sure that, as I said, the webinar is recorded as it's supposed to be. So I'll be back in just a few moments and we will begin. Thank you very much. Okay, it seems fine. Everything seems okay. I think we can safely hit the road. Like I said, I'm Danny. This is the Trading Talk Uncensored live Q&A session, and we will begin with the questions that we received. Okay, I see that so far we haven't received any questions. So you guys, like I said, you are free to use the question section. Okay, so the first question is, how does leverage affect profit or loss? Okay, very nice. The second question is, what is better to use for trading, a phone or a computer? Okay, I think we had that before, this question. How long should a trading session be? That one as well. How important is psychology in trading? Oh, that's a nice one. And what is the best way to improve it? Okay. So we have very, very interesting questions today. We're going to have the first one to begin with. And I would also like to have some place for my notes. And I'd probably suggest you guys to do the same. Obviously, if you'd like to take notes along the way. We're going to quickly take the question, paste it here, and then we can begin. All right. So how does the leverage affect profit or loss? Let's minimize that first, and let's pick something from our metals. And let's go with gold. Why not gold? Okay, and let's put the lot size to 0.01, which is the bare minimum available on the platform. Okay, for gold. And what we're going to do, oh, just before we carry on, for the people who are using MT4 and MT5, because I'm well aware this, not all the clients are using this interface, which is a shame, because there are lots of useful things in here. So for the people who are not using the web trader, you should know that there's a question here from Lucretia. That's the price of one lot with AvaTrading. What is the minimum deposit? Well, that is two different questions. Let's see if I can get it to make sense. What is the minimum? So I'm simply going to take that, and we're going to pick. Oh, that's not what I wanted to do. Let's try that. Will it work? No. There we go. And we're going to paste your question down here. Thank you very much. Because I believe those are two different questions. Actually, I'm going to show you the answer for that one now, so it would make sense, okay? You see, your question is, let me just go through the questions. What is the best, what is the price of one lot with Ava? Well, yeah. What is the minimum deposit? Okay, so the price for one lot depends on the instrument. There is no price for one lot because one lot is different in every instrument, right? So one lot in here is going to cost you, well, let me get to that, because again, I'm showing now, you see the question that I'm answering is how does the leverage, was it like, okay, how does the leverage affect profit or loss, right? So the way that it affects is it multiplies buying and selling. And what you're asking about the price for one lot, that depends if it's with margin or without margin, with leverage or without leverage. So from the answer I'm going to give you now, you can probably understand the answer for the other question as well, if it makes sense. Let's begin. Enough with the stories. Gold. We have gold price per unit. Let's look at it here. We have buy, right? And we have sell. As you can see, they are almost the same. There is a spread here in between, okay? But the general price here is 25.22 for 1 unit. Now, number of units, let's make it 5. And then we're gonna go and write down the leverage. The leverage here is 1 to 20. Now, why am I putting all this down? For you guys to understand how the leverage affects the profit or loss. Okay, I'm going to show you how the leverage have effect on trading, and then we will judge if it has effect on profit or loss. I'm going to tell you up front, it does not make you lose more or less. It lets you sustain the position more than you could have had without the leverage, and it gives you obviously the ability to take the position in the first place. But I'm explaining now a way to understand the whole picture and not just profit or loss. Now, 1 unit cost us $25.22, so $2,522. We are going to acquire 5 units, as you can see here. The leverage is 1 to 20. Okay, and the margin impact is 630. Now, we are missing here something called value. The value here is 12,612. And let's understand what each of those things means. I'm going to write down here a few equations here just to understand. Price per unit times number of units equals value, right? And we have value divided by leverage equals margin impact. Few things to understand what each of those terms means. Leverage equals multiplies buying and selling, right? And we have margin impact, which is necessary amount to open a position, as I said. Now, we have a question here from Amjad. Amjad, you're asking, is the real account the leverage for gold? Let me quickly take your question, Amjad, and we can have a look at it on the right here. Oh, doesn't work out for some reason. Sometimes, oh, there we go. Maybe now. Yeah, very nice. All right. Is the real account the leverage in the real account, the leverage for gold is 1 to 200? Is it different from the demo? Let me get to that. The answer is no. Okay, it shouldn't be different from the demo, but let me get to that in a moment. Yeah. Okay, so as I was explaining, this is super simple, guys, to understand. 1 unit cost 2,522. If I would have taken 10, it would have been 25,000, and so on and so on. Because I took 5, it's worth 12,000. Let me just show you that quickly. You see, it's very easy to compare. 2,522. If I take 10, the value is 25,225. If it would have been 100, which is one lot, would have been 252,252. Sorry, 50. Well, okay. Now, we are doing this exercise with 5 units. Therefore, this should have been multiplied by that. As you can see, price per unit times number of units equals value, which is the value. We have the, let's put that underneath just to really have a nicer structure. The leverage 1 to 20, what it does, it multiplies buying and selling. Okay, so it multiplies my ability. And this is how I can take this position with only 630 instead of 12,000, which I couldn't take the position, right, without the leverage. Okay, so we understand that. Now, this is the actual amount that I need available in my account, not in my balance, and not in my equity, in my free margin. I need to be able, to be able to take the position, I need 630 available margin. Okay, it's really, guys, it's really as simple as it gets. Let's simulate with 10, right? So with 10, we would just double the numbers here, but still, I want you guys to understand. Yeah, just bear with me, guys. Bear with me. We have everything fixed. Yes, we do. Okay, so as you can see, if I make that times this, we have 25,000. If I divide this by that, we have the margin impact. Is this understood? Guys, is this bit here, it's super basic, but still, is it understood? Do we have any questions? A question from Skylar, but how does it affect? Yes, Skylar, I'm getting to that. Skylar is asking just to share with the audience. She's asking, so how does it affect the profit or loss? I'm getting to that. I wanted to establish this first. So I won't just give you a blunt answer and say it doesn't affect or it does affect. Now I can understand. Okay, so how does it affect the profit or loss? From this, we understand that the leverage doesn't make me more lose more or gain more. It just gives me the ability to stay in the position perhaps longer than I could have had without the leverage. And of course, it gives me the ability to take a position with much considerable amount, with much lower amount. Okay, so how does it how does it affect profit or loss? In practice, it doesn't change the more leverage doesn't give me more profits. It gives me the ability to acquire more units, which can make me more profits. Let me just show you that quickly. Let me just show you. I want to demonstrate. Let's stick with 5. I think it would be just a little easier to understand. 25, 21. Let's make it 25, 31, right? Then, sorry, let's make it 41. Then we have 20, and let's fix that. Let's make it even 22, 42. Yeah. So look here. It's very easy to understand. Okay. The value for this position is 12,000. So without the leverage, I wouldn't be able to take the position in the first place. Okay, do we understand that? We only have 10,000 and this cost 12,000, 5 ounces. How does it why does it cost 12,000? Because one unit costs 2,500. So without the leverage, I wouldn't be able to take the position here, right? This, well, not even that. This one I could take. This one without the leverage I could take, right? And then I can make, if it moves $20, I can make 60, right? We have 3 ounces. Let's make it 1 just to understand a little easier, even easier than before. You see, without the leverage, I could take 4 positions like this, 3.5, right? And then I can make $60. Thanks to the leverage, I'm gonna take you to the extreme, guys, but don't necessarily, as I said in the disclosure, this is not something I would recommend to do, of course. Okay, so with the leverage, what I can do is I can take many more units, as you can see, many more units, which gives me the ability to make more profits. Okay, as you can see. Now, without the leverage, I wouldn't be able to take the position, which means that I could acquire less units, which on the same price difference would give me less profits. That's how it affects. So what I'm going to put down here is the leverage doesn't make you lose less or more, but simply give the ability to acquire more units and sustain the position more efficiently. Right? Now let's take that, put it in the answers. And don't worry, guys, we are going to we are going to paste the other equations as well. Let's just make this one a little smaller. Now, of course, if I can take more units, I can make or lose more capital. But it's not making me, the leverage doesn't make me lose more or less. Okay, I'm going to show you now the percentage out of the value that I must have in the account as a collateral for the leverage. Because the leverage is not limitless, you must have a certain amount, which is called a margin impact. But what is this margin? How do we know what the margin impact is? So we saw that we can divide a value by the leverage. You can also go to here to instrument details, and it's going to show me that the required margin to use the leverage on gold is 5% of the value. How so? Because if we divide 100 by the leverage, we get the margin percentage requirement. Okay, I don't want to confuse anyone. Let's just carry on with ease. Do we have any questions about, do we have any questions about, well, the answers? There's a question here, does Ava have an account with 1 to 1,000 leverage? Not that I'm aware of. None that I'm aware of. I'm not even going to put that down because I don't think we do, and I don't want to confuse anyone. So like I said, let's just carry on with ease for now. What is better to use? So frankly, this question is actually it's interesting. So let me see, guys. What do you think? Okay, what is better to your opinion to use, a computer or your phone? What do you think? I think we had this question a few weeks ago, but it's still interesting to see what people think. What do you guys? Who votes for a phone? And who votes for a computer? Who is trading here with their phone and who is trading with a computer mostly? Sajid, sometimes the computer, sometimes the phone. Okay, so Sajid, you're going hybrid, sometimes this and sometimes that. That's fine. Who else is using both? Samaya also using both. Okay, a phone will be easier as you have it all the time. I agree with you. Okay, so we have 2 more people with the phone. Also, Lucretia also phone. Okay, so actually from what I get from the audience, most of you guys are using a phone, which is completely fine. But let's see how we can answer this question. So a phone, as written here in the audience, is with you all times. So it's available, right? A computer is not, but it's bigger, right? Usually, and more comfortable, right? Now, what is better to use? What do you guys think that is better to use? Would you rather see a movie on the in a TV or on the computer? Or let's take it more extreme. Would you go to the theaters to see a movie there? Okay, or would you see it on your phone? The difference is very simple here. I think that phones these days could be more sophisticated than a computer even. Okay, in our app you can find many nice features, and in general I think a phone is not a bad idea. But if I compare the facility, okay, if I go fully practical, I would vote for the computer. Again, this is only if you have the ability. Of course, if you're a busy person, you don't have a computer, you don't have access to a computer, you don't like computers, I don't know, for any other reason, of course a phone is available, and I think they can stand almost on the same podium, right? But at the end of the day, let's see, there is another reply here. Computer is better for more attention. Okay, maybe coming from Mengistu, right? So this also something to consider. Maybe you're paying more attention, could be. So if I think about it from that point of view, what you're saying is basically on the computer, I'm sitting down and I have my screens and I can, you know, do things a little more focused, and maybe on the phone it's a little more on the go. Could be. Again, I can relate to what you're saying, and also, like I said, the only difference that I would think of is the size of the screen, and the other thing that I would consider is also if I'm using a crosshair, if I'm using a physical mouse, okay, on the computer, if it's a laptop or whatever else computer you're using, versus the touch screen touch, right? Because on the phones, I don't know what you guys are using, but I think now the the phones that doesn't have the touch screen, they don't have the app, and this is why I don't talk about them at all, because they're not an option. But this is something also you must get used to, because on the computer, if you want to expand the chart, let me just show you. If you want to play with the chart, you take it up and down, left and right. You can also do it on the phone. It's just a bit different, right? And also with the crosshair, if I go across the chart, I want to get information from the candles, and I want to place a few things. So it's not necessarily good or bad. It's something to get used to, and it's just a matter of flavor, maybe even technology flavor. I don't know how to label that, but I guess you guys understand what I'm saying here, right? So a computer can be great, a phone can be great. To my personal opinion, I would rather have a bigger screen. I'd rather have 3 or 4 screens if possible, but one screen might do the job. And of course, a cell phone compared to a nice facility with 2 screens, one for analysis, one for the charts, and yeah, it's a different story to my opinion, but of course it's only my personal opinion. So what is better to use for trading, a phone or a computer? They are both great. It's a matter of time. Okay, I'm just gonna write there. Gonna paste it anyway. Right? Okay. They are both great. It's a matter of time availability, right? Technology taste. And interface. Yeah, it's quite similar, but still the size of the screen does make a difference. You guys can argue, but I guess the more experienced guys will understand. Okay, 10. Okay, very good. How long should a... All right, so this is also something that we don't talk about a lot, but I think it might worth mentioning. Okay, so how long should a trading session be? What do you think? Let's put down here some options, right? So we have A, let's say 30 minutes, right? Let's say B, let's make it 1 hour. C, let's make it, let's say 3 hours. And the last one, let's go extreme and say, I don't know, 5 hours. And though there are some people who are trading like the full-time job, they can have 8, 9 hours. Frankly, I think it's very intense. Whoever can do it and make money with it, thumbs up. But let's talk about it and understand, right? So how long do you think that a trading session should be? 30 minutes, 1 hour, 3 hours, or 5 hours? What do you think? Anybody has any opinion about that? What do you what is your trading sessions usually? Half an hour, 1 hour, 3 hours, 5 hours? Max, I usually okay. So we have Max here trading 1 hour. That's nice. How often? This is a good question. So Rajid, you're asking how often should it be? I think it's different uh, because that depends on you. So you can have a daily session, or you can have a weekly session, or you can have, well, few sessions a day, right? But I think the question here is asking how long should a trading session be, if it makes sense. Just to simplify for people, a trading session is a definition for me sitting by the computer, either analyzing, either executing the position, either modifying the position, anything's related to trading for me on the computer doing in my tradings is considered a trading session. Okay, going to the computer or doing it on the phone, maybe closing a position or opening a position, not necessarily considered as a trading session, but let's say spending a bit more time than that, doing the process analysis and all of that, I would call it a trading session. Maybe a brief one, but still. Lucretia, 1 to 2 hours, depending on how fast the market is moving. Okay, so we have Max here is trading 1 hour. Lucretia is trading 1 to 2 hours. Mengistu, 2 hours. 1 opening, 1 closing. Okay, so the majority of the audience here, from what I see from the comments, is ranging between 1 hour to 2 hours, which is very, very nice. So this is, I would say, this is probably our winner. Okay, you guys agree with that? I want to speak about just a little bit about the advantages that we have with a trading session being 30 minutes or being 1 hour or 5 hours. Of course, 5 hours, I took it to the extreme. If I'm spending 5 hours on daily basis, I'm probably a professional trader. Okay, otherwise, to spend 5 hours a day trading without being a professional trader is something I would consider as a very, very interesting hobby. Let's put it this way. You can do it. Again, it's not about being able to spend time trading, or let's break it down. Let's break it down. We have a few things we must put in order. So we have analysis, we have execution, we have management, right? Now, all of those things are things that don't necessarily have to happen on the same session. I'm not necessarily gonna analyze, then I'm gonna execute, then I'm gonna manage my positions all at the same time. I can do that, not always, not always. Sometimes I'm gonna do some analysis, I'm gonna do some research, see what's going on. I'm gonna prepare to do something or not to do something if the market goes this way or another. In the execution part, it's when I already defined certain guidelines and I know what I'm doing, not just randomly going and doing. And in the last part, the account management in terms of risk money management. Okay, so this position, is it behaving the way that I've anticipated? And I just enhance and I improve whatever I've done. So all those things are additional layer, but at the end of the day, if I'm having a 1 hour session, I can dedicate 20 minutes for analysis, 20 minutes for execution perhaps, and then the last part for account management if I really need to, positions management, whatever you want to call it. Okay, I think 30 minutes is a little challenging. It's not impossible to do it in 30 minutes. Okay, especially if you have it written down and you don't have to reinvent yourself. So of course you can do it in 30 minutes, sometimes even less. But that's what I think. So those are the options that we've written down. Okay, the obvious winner is 1 hour. We have at least 5-6 people voted for 1 hour to 2 hours. So yeah, I think that definitely, and to my opinion as well, I think 1 hour is quite well for an average person. All right, so let's take all of that and simply put it down here. Can you please explain how to do risk money management when trading gold in micro lot? I'm gonna do it. Mr. Or Mrs. Amjad, in just a moment. As soon as I'm done with the last question, let me just minimize what's happening here. Oh no, I think I've well, there we go. Okay, and I also think we're gonna put them one next to each other, otherwise it's gonna take all of our place. Yeah, I think that makes it just a bit more sense. Also gonna get rid of the, okay. How important is, it's like, oh, let me get your question, Amjad, so I won't forget. Okay. Right. We are missing here the Q. Let's be formal all the way. Yeah. That is something that takes time, and I'll be honest, guys, saying I'd rather answer your questions first before I'm getting to that. Okay, so I'm gonna exceed the usual structure of the webinar because I really want to do that first. All right, what is the price for one lot? Who asked me this question? Was in the beginning. Whoever asked me, I think this question and that question came together, right? So that one, I'm gonna write down here just a simple explanation. Lot is a measuring unit, determines how many units are unified in a single lot. Example, one lot can be worth to 100. One lot can be worth 1,000, 10,000, 100,000, and so on and so on. And now, what we're gonna do is we are going to write down here that a lot, a price for a lot is determined by the price per unit times number of units in that lot. Example, one lot of gold, of course, we looked at gold, would be equal to 252,253 it was. Let me look at here. Let's see, one lot. Yeah, it was very close, but yeah, Yeah, we can say that. We can say that. I think the price here has changed. So now we let me just break it down quickly. 2522 times 100 equals, yeah. And we even have the nice little equation there to help us understand. And yeah, we are good. Of course, this equation will work for any other asset, but I took gold because gold we saw and we already know the numbers. The second question is, what is the minimum deposit? I'm really not aware of all the minimum deposits and all of that, because this is something our dedicated registry agents are doing remarkably. But I'm gonna take a wild guess that it's 100 or maybe 200. I need to check, but I think 100 is the minimum. 100 is the minimum deposit, and I believe it with 1,000 can get you an account manager service. Okay, this is what I remember. Again, I'm not. Yeah. Oh, it's 100. Oh, we have somebody where Amjad here is confirming that 100 is indeed the the minimum. Very good. Thank you. Thank you. Okay. Of course, we have promotions, so I guess sometimes it could be more or less, but all right. Is the real account leverage for gold is 1 to 200 is a different one? Okay. Demo account and a regular account should have the same leverage. Okay. Leverage is defined is by the regulation. The regulation classified on the account. Okay, the leverage is determined by the regulation on the account. And it should be the same. Of course, if the accounts are the same, the real account and the demo account belongs to the same person under the same regulation, it should be the same. I hope this makes sense as well. Okay. Can you explain how how to do risk money management when trading gold in microlot? Okay. Whoever asked me this question, prepare yourself. We're going to look into that. And we are going to answer right now. Okay. Do risk money management with gold trading microlot. Okay. Let's quickly, you guys will have to give me just a few moments just to have an idea where I am so I can place the lines to show it for you guys. All right. So first of all, what is risk money management, right? Okay. Right. So risk money management is to basically manage your risk, right? Risk money management equals to have control on the risk in my trading. Therefore, Right now we're looking at the position with gold. The now price is 25.21. We're looking at 0.01, right? Who knows? What is this? Is micro lot. So what is nano lot? Who knows? Who knows what is nano lot? 0.001. That's correct. I'd like to fully know if we can use AI bot fully. God knows, Mengisto. This kind of questions, I'm a dinosaur. I don't know. I don't know about AI bot fully automated with the trading. Whoever told you that or showed you that can explain to you perhaps how he's planning on using that. I can't tell you yes or no because we're not. Okay, it works a bit different. We do have something. It's not an AI fully automated that you can just plug in and play, but it's something that can assist you if you're looking for a solution in that direction, if it makes sense. Okay. All right. Now let's focus on what we have here. Can you explain? Okay, so how do we do risk money management with 0.01? Okay, the now price is 25.21. We're looking at take profit and stop loss here. We don't really need to take profit, so we're going to get rid of it now. The stop loss, we're going to place it $50 away. Stop loss will be minus 50, so that's 24.69, which is here, right? And then we'll make it. Oh, sorry, my bad. I should have took it from the now price and I took it from the recommended price. Don't get confused, guys. Don't get confused. There we go. That makes more sense. Then we can simply take that guy a little lower. Okay. Now, let's make it red. This can be our potential stop loss. Okay. Okay. Now, if I make my stop loss 24.71, I can lose $50. Amjad, I think you're the one also asking me that question, so I pay close attention. If I have 1 unit of gold and it goes against me, what does it mean it goes against me? Of course, when I'm buying, my intention is that it will go higher, right? If I need to go higher and it goes lower, anything lower than the current price, it would be my loss area. Anything higher than that is my profit area, right? Let's make our profit area naturally green. Loss area will be naturally red. Same as the candles go by. Right. And now, if it goes all the way to 24.71, because we have just 1 unit and it goes down 50, we can lose $50. Okay. How do we do risk money management to that? Usually, with risk money management, you can do 2 things. A, you can reduce the lot size and then you minimize your possible loss, but as well your possible profit, right? For instance, if this would have been 4, I could say, listen, 200 is too much and I want to maintain this as my stop loss, and perhaps I can cut it by half. Let's make it 2. Okay, but in a scenario that I'm also having take profit here, this would have an impact on my take profit as well. So by reducing the 4 right? If I can make or lose 200, I reduce it to 2. Now also my take profit is affected by that. So what I can do instead, okay, is to move the stop loss. Let me bring it back to 1. Now I can gain or lose 50. And what I can do instead is I can move the stop loss towards my entry. And then I can minimize my stop loss. So I want you to look carefully what happens when I click here on the minus. Basically targeting a higher price closer to my take profit. Watch, we're gonna go plus to increase the price, pushing it upwards, plus, plus, plus. We're gonna go like this. Okay, and as you can see, the stop loss is getting lower and lower. Okay, keep on increasing just like that, as you can see, but this takes a lot of time. So instead of keep clicking here on the plus, I'm simply going to simulate it with half of the length that we took. So instead of 2520 minus 50, we're going to go 2520 minus 25, which brings us to 2495. And now, instead of losing potentially 50 and gaining potentially 50, we are losing potentially half and gaining the same amount. I hope it makes sense. Let's see how much. Oh, that's very unfortunate, guys. Because I wanted to, well, honestly, we didn't answer that question. But I don't really feel too bad because I had a chance to answer the questions from you guys. So I'm good with that. I'm just gonna maybe talk about it for a minute. But first, I want to know if the person who asked me that question is understood. Does what I showed on the chart, does it make sense? Whoever asked me that question, which frankly I can't remember, with the risk money management, does it make sense? So basically the answer here is when trading the minimum lot size, we can get the stop loss closer to entry, and by that minimize the potential. Actually, yeah, let's keep it profit or loss. No. Let's keep it potential loss. And let's just closer or farther to the entry, and by that minimize or increase the potential loss. Okay, this is to be able to control, to have a better control. Amjad, yes, it does, but based on what determine? Well, this is something, listen, this is something you have to consult with your senior account manager to help you out with. But I can give you here an equation. I hope it would make sense, which you can go potential loss divided by balance equals X, and then you can go X times 100 equals percentage exposure. Meaning, if I'm going to go 24 out of 10,000 that I have, so it will be let's make it 20, even 25 divided by 10,000. How much is that? Who knows? Let's try that together. 25 divided by 10,000. So 0.00025. So if I'll multiply that by 100, it's 0.25%. It's 0.25% out of my balance, right? So this is how I can customize, and I can determine my exposure, and according to that I can move the stop loss up and down, and that by that I can help determine what can be the possible loss. Okay, let's put that down. Maybe I will save this question for next week. We can answer that next week. I'm gonna leave it to our guys so they won't delete it. Please. Okay. Yeah, we've concluded everything with pleasure. I want you guys to understand you shouldn't you guys should feel free coming to this webinar asking whatever you want. It's exactly why we're having this concept. If you guys don't ask, I don't have the ability to help you. So it's great. Thank you all. Let me just give you the promotion here because I don't have the time to send you the links because we have to finish the webinar anyway. But I will show you a nice shortcut, and I will also give you the promotion code here for the one-on-one premium market review. Let me paste it in the chat, which hopefully I can find. If only I can, there we go. There you go. Give this to your senior account manager. You're gonna get one-on-one premium market review. And yeah, because to send you all these links takes time, and we don't have a lot of time. We don't have any time at all, to be honest. I'm gonna show you how to get there from here. Okay, you can go to the web trader. You're gonna go to here. As you can see, Academy sends you to the Academy. And in here, if you go to tutorials, you can see the tutorials. You don't have to use the link. It's right here. Look how much content. You can go through that and enjoy that. Guys, unfortunately, we have to say goodbye. I hope you all enjoyed. Thank you for the audience, for being such great audience and assisting me with your questions and the answers and wonderful cooperation. I wish you all a fruitful week, have a lot of profits, and have a good day.